All right, top three stock tips or top three. Hello, everybody. Welcome to our YouTube channel. This is our first episode. My name is Stefan. I am an extremely novice investor. And Danny here. Say hey, Danny.
Hey, how's it going, guys? I've been
Yeah,
trading for 20 years now, actually. Yeah, so I know a
yeah,
thing or two at
yeah.
this point.
Danny has the experience. I'm the one who doesn't know what I'm doing. So what we want to achieve is just not only teach me, but through me and through the conversation that I'm having with Danny, maybe hopefully you guys can learn too about how to get into the stock market, what's good to do, what's not good to do, and all that sort of stuff. So is it even a good time right now to get into the stock market?
It is depending on the sector. Some sectors are very underpriced. We spoke about this last night as far as hotels, Wynn Resorts, MGM. I mean, they're casinos, but they run hotels too. Travel, as far as airlines, things like that. There are pockets of valuation that make sense. Apple, even though it's dropped a bit, it's still very elevated. It has never traded above the current $241 prior to October of 2019. So even though it is down a bit, you're still paying pretty near top dollar for it. So you have to be selective in this environment. It's a very risky environment because of the volatility. So as long as you're selective, do your background as far as the homework on every sector you're looking at and individual stocks in there. I think there are a lot of opportunities though right now, definitely, especially with the volatility where it
Yeah,
is.
because the market just reached back to where it was in 2016 before President Trump took office, which was
Mhm.
already at a pretty high, right?
Yeah, it had already rallied. I mean, Trump took office, well, the day of his election when he won in November of 2016, the Dow, I think, was right around like 16 or 17,000. And it got very close to that now last week at around 18,000 or so. Now we're at 21,000 of the Dow, so it's recovered some of the losses from peaking at 29,000 a month and a change ago. But it's still, just because things are, 15, 20% off doesn't mean they can't necessarily get a lot cheaper still, as
Yeah.
we saw in 2007 and in 2000 in particular.
Well, how much amount of cash does someone need to really try to like make like some sort
A
of a
decent amount,
income?
yeah. So
Yeah.
ideally, the good thing is now that it is zero commission for the most part, you're trading almost commission free. There are some exchange fees that will tack on there a little bit, but I would say bare minimum at least $1,000, ideally five or $10,000, which is tough for some people to gather and throw into this new venture they've never gotten into.
Right.
But you need to have a decent amount so that the fees don't really add up. To be investing $100, it's not worth it. You're going to get eaten up by fees, even if you're not actively day trading. It will add up at that point.
About a couple of weeks ago, the market went up about. I mean, the market went down quite a bit as far as from
Precipitously. Yeah.
the S&P 500. All the went down quite a bit, and
Mm-hmm.
then it shot back up, and now it seems to be going back down. Do you think
Yep.
this is going to go down even further?
It could still decline quite a bit from here. I'd say comfortably 30 to 40% from here.
Wow.
To just be kind of a like normal bear bottom, just recession or whatnot, cyclical bottom for valuations.
Yeah.
But if you're selective, you can avoid some of those losses by buying into, for instance, like a Bank of America. It's a pretty safe stock, earnings wise, valuation wise. Dividend also helps at that point as well, where you get 15 cents a quarter in cash paid back to you at that point too. So at $20 a share, that's pretty decent at that point. Yeah.
So let's just talk a little bit about what's going on. We got this COVID-19 pandemic that's basically taking over the country. It looks like we're getting the brunt of it right now. Spain, Italy. It looks like a lot of people are getting the brunt of it. So let's just talk about how that's been affecting the market in the last, month or so.
You have so many people laid off that there's a lot of uncertainty as to how long this lasts, how deep the actual oncoming recession is going to be, because at this point it's inevitable. With the number we saw yesterday, where 6 million people filed for unemployment in a week,
Yeah.
on top
I'm
of
one
the
of
3
them.
million, yeah, on top of the 3 million the week before. I mean, these are numbers. The number before last week at 3 million was a record breaker, and then we doubled it this week.
I
It's
mean, it was just
never
at
been.
3.5%, if I'm not mistaken, right before all this stuff
Yeah,
happened.
yeah,
And
it was
now it's at
very low. That's about as low as the economy will ever get, really, because there's always some job losses, whether it's underperformance or some businesses just fail. It's very rare to get below the number we're at. It was an ideal, I mean, clean running machine, but with a lot of leverage. There's a lot of debt in our economy, and this is the worst possible scenario where you have revenue go to zero, you have income go to zero, and you don't know when that's going to stop. So how do you prioritize your payments at that point? That's why you have so many businesses furloughing and just laying people off, because they still have to pay, for the most part, rent if they want to stay in their building, or their lease, or their mortgage, whatever it is. And there's so many obligations that continue to, the bills keep stacking up, whether you're open or not. So that's the main reason you have this quick decline. It's been as drastic as it has been for the S&P 500 because we were so elevated. I would argue that if the stock market was closer to the 2016 levels, we may have only declined 10, 15% at that point in the same time span, about a month.
Your pup back there really wants to get
the
in.
Miniature pincher wants in.
Yeah. So it sounds like you prefer option trading over any sort of like day trading or any sort of like other play.
I tend to prefer it because you have that margin of error where you're not committing to say the stock will go up now, starting here. You get the chance to say, I don't think it'll go down 10, 15, 20%, whatever strike price you choose. And you have some wiggle room there rather than just saying from here on out, I know the stock's going to go higher. But with a lower upside also comes lower risk. That's what I like about it. And in this environment where risk is so high and you just don't know what happens tomorrow as far as COVID infection rates or mortality rates, it's better, I think, to play it a little bit safer and say, you know what, I'll buy Disney 5, 10, 15% off, as opposed to just paying for it right here and now and hoping that things just turn out okay over the next day, week, month, year, or whatnot, you know?
So this previous week, the market started a little bit up, and then it seemed Wednesday, Thursday, Friday, it just started to slide down big time.
Yep.
What do you kind of course, none of us are fortune tellers, but what do you kind of see is happening this upcoming week in the market?
I think we're going to have more of the same, where there's going to be large swings. But if you look at where we ended last week to where we ended this week, we're pretty much in the same spot we started on, which is why I'm very adamant about cautioning against day trading, because along this week you could have made money if you were very lucky and good at what you're doing, but 99% of day traders fail. It's just that's the facts of life. Yeah. So in this environment, it's not likely that you were able to pull that off on a regular basis, recurring basis. Yeah. And grind out that profit, you know, for the stock market to literally end up in the same spot after swinging 3 to 5%, I think pretty much every day this week. Those are large moves for the indices. So
give me your top 3 picks for this upcoming week from a long-term investment standpoint.
I do like WYNN Resorts. I've spoken about it a few times. Yeah. Recently, with the panic lows, when the Dow hit 18,000, WYNN Resorts got down to 35.84, and it ended on Friday today at 48.50. So well above the lows, but also well below the recovery highs that we saw last week, where it got over $80, $83 almost. Besides that, I do like Bank of America. I've mentioned that as well. It's still near the low end, where prior to this whole panic, really, it hadn't traded below 26, and you're still able to buy it for $20 even almost. As of Friday, it finished at $20.03. So I really like that as well. It's a different sector, so you get a little bit of diversification if you go with WYNN Resorts and Bank of America. APLE for Apple Hospitality. They own 232 hotels, all in the US, all Hyatt or Marriott, so they're premium brands. Once this settles and the economy starts to function again and people leave their houses, they should have pretty decent occupancy rates, and those hotels will generate a lot of money like they always have. The dividend is in the meanwhile suspended, but typically pays 10 cents a month, which is $1.20 a year. So at the stock, as of Friday's close at 691, is a very good dividend yield once things begin to normalize and operate on a normal basis. I expect after August, more than likely, the coronavirus will have waned and be under control at that point. So by the end of the year, I do expect them to issue a dividend. It probably won't be anywhere near $1.20, but I would expect it to be 30, 40 cents at least, a third or so of the normal annual dividend. And then once things continue to be normal and functioning, then the dividend should head back towards $1.20 a year, which would be great to own if you can buy the stock for $6.90 and literally get your investment paid back in 5 years, basically.
All right, guys. So that pretty much does it for our first episode. Thanks for watching if you got it this far. On our next episode, we're going to talk about just like the fundamentals of looking at a stock, like just making sure it's a sound investment. Danny will kind of walk us through that. So I hope you join us next week, and we'll see you then. You want any sound off message, Danny?
Be safe out there. Don't try and day trade too much, and stay at home if you can. Yeah, definitely.
Not left my house whatsoever.
Yeah,
it's just not worth it. So.
Yep.
All right. Thanks again, guys, and see you next week. Thanks.